Hello, Sushmita, and hello to everyone. So,
Hi.
hello. So, let's start the review of 1 minute time frame. So, if we see the first bar, it was a decent enough closing bar. Second was a strong closing bar. Third bar was also a strong closing bar. So, three bar closing near their highs. And also, if you
Yeah,
observe,
entry.
yeah, and also if you observe, the first bar is closing below above its midpoint. So, by definition, it's a decent enough closing bull bar.
Hmm. Okay.
You're about to say something.
Yeah, when such pattern occurs, it is to entry, right?
Yeah, you enter on the long side, buy the market or one tick above this bar's high, place your stop loss one tick below the first bar's low. You want your 1
Hmm.
is to 1 risk to reward. You also want 2 is to 1 risk to reward profit target. But then I would just scalp it out, especially after this huge 1, 2, 3, 4 bars closing near their highs. Leg 1, pull back, leg 2. And in the leg
Hmm.
2, 3 consecutive bull bars plus 1. So you can find a reversal pattern. If you don't want to enter on the first entry, wait for a second entry and look for a micro double top or a double top pattern and then short. I'll explain the live trades which I took later on.
Yeah.
So here is one more entry on the short side. Let me mark it out for you. So the same reason, 1, 2, 3, 4 pull bars closing near their highs in the second leg. That traders who bought this close are trapped by this bear law. So either you can go short one tick below this bar's low, place your stop loss here, or one tick above the entire day's high, or you can wait for one more strong closing bear bar and then go short. People wait for 2 bars, 3 bars. It's up to them. I went short here on the tick chart. I will show that trade later on.
I
If you
have a
see,
question.
yeah,
See, initially there are first three bear bull bars. That is
yeah,
a good entry, right? If
yeah.
it is missed, there is again one more something like that. Three more, which you showed me now.
This
Yeah.
three.
Yeah.
Yeah, but
So
then
why? So,
see, this is leg one.
yeah.
This was the deep pullback. This is the leg two.
Yeah.
The 3 bar consecutive, you want to trade 3 bar breakout setups. You should only trade those on the first entry
Okay. Okay.
or the first
Got
leg.
it.
If it's occurring in the second leg, you ignore those trades because most
Mm.
likely it's going to be a trap.
Yeah, correct. You mentioned this.
Yeah, traders who bought this high or closing, hoping there will be a measure move higher, they got trapped seeing this bear bar. So they will exit here or wait for a break even exit. Suppose they bought here on the close of this bull bar, their entry price is here. So they'll wait to exit when it touches this price again. Did it reach it? If you see, they got trapped on the next bar. The,
Yeah.
the following bar didn't even give them the break even exit. So once
Mm.
it closes strongly on the low, what do you think they will do? They wanted a move higher. They know that price is very much deviated from the EMA. So the nearest magnet which can act as support is all the way down here.
Yeah.
If they wanted, they could have traded a pullback structure or a 50% pullback of this leg. I'll explain 50% concept on a later day. Let's keep the video short.
Yeah.
So now, since they entered here, hoping for a measure move higher,
Mm.
they got trapped
Correct.
immediately. And then they were waiting for an exit on the follow through bar, which they didn't get. Instead, this trap led to another huge trap. This trap made them want to exit at the break even price, but the next bar made them want to exit at the market. They didn't even want to wait till the price comes back here. That is why
Yeah.
you see a deeper pullback.
Correct.
Okay. Now, I just told you that if previously I asked you to trade 3 bar breakouts on the first leg. So if you see
Yeah.
1, 2, 3 bear bars closing near their lows, so can you short this close and put your stop loss here and hope for a major move down? You can,
Yeah.
but why I wouldn't take this trade is because the prior trend or the major trend has been bullish in nature. So unless the character change of this bullish pattern occurs, I wouldn't swing trade or trade very aggressively on the counter trend side. If at all, okay, when I would take this trade is if the third bar closed very strongly below the EMA, then I would take the trade. Here, if you see, the
Mm.
major trend has been bullish in nature. I just told you that people who entered here got trapped and they exited. But what about traders who have many years of experience and can scale in very aggressively? If they bought here, they could scale in on a limit order at the EMA, touch of EMA, or one tick above this bull bar, then get out at a break-even price. Suppose, let's say they bought here and they bought
Mhm.
somewhere here again, which is the 50% mark. Yeah, this is the 50% mark.
Yeah.
So people who bought here and have the ability to scale in, if they scaled in here or here waiting for a strong bull bar closing, they exit at break even price. Why? Because suppose this is 10 rupees, this is 5 rupees, this is somewhat 7.5 rupees, right?
Yeah.
So this is the average exit they get and they don't lose any money. If this third bar did actually close below the EMA very strongly, then the scaling bears would have also got trapped. Scaling bulls would have also got trapped. So that would have been a better sell. Here, since it's bouncing back after touching EMA, I wouldn't.
Yeah. Okay.
Okay. Suppose you wait for one more bar, 1, 2, 3, 4 bars closing near their lows, and this is a breakout of the CMA. Can you sell this?
Mm.
Yes, you
But
can. I
there's
wouldn't.
the next part below EMA, right? Still, it is a bad one.
This one, right? That is what I'm trying to
Yeah.
explain. So here, if you sell this close, what did
Mm.
I teach you about price action? Big up, big down, confusion means trading range price action.
Yes.
And what is the, how do you trade the trading range? You find short setups in the top third region. You find long setups in the bottom third region.
Yeah.
If this is big up and if this leg is going to go down all the way here, then it's going to be a trading range. And if you divide this to three equal parts, you'll find short trades in this region. You will find long trades in this region. So instead of finding a short trade here, it's better to find a long trade in the bottom third region. And trading ranges usually have leg one and pullback, leg two, right? But I also told you at times V-shaped reversals can happen. This was a V-shaped reversal, big up, big down, confusion. So trading range. Now you understand why I wouldn't take this 3 bar breakout setup.
Yeah.
Okay. If you see price rush to EMA, this is the first attempt trying to go higher, second attempt, and this is the third attempt,
Yeah.
this bull bar.
Mm.
So people who scaled in here and didn't enter on a limit order at the EMA, rather they want a strong closing bull bar near its high and then they want to enter. They entered here. Also, this is a technical pullback setup. What is a technical pullback? It's a volatile pullback setup. See,
Yes.
one push higher, second push higher. Assume this didn't happen. EMA
Mm.
caught up, and let's say this was a down bar, then up bar, some down bar, then up bar. So this is the first attempt to go higher. This is the second attempt to go higher.
Yeah. Huh.
That is the typical pullback structure you get, which is flat.
Yeah.
What will a deep or a volatile pullback look like? This is what it look like. It looks like.
Okay.
If you
Got it.
go to a much lower time frame, you would be able to see that this is also a wedge leg. Suppose we go to a 30-second time frame. Do we have a second chat? Okay, we don't have a second chat on Tradify. Uh, Let me see. Even they don't allow, I guess. Okay, they don't. Okay, let me just explain on this chart. Okay, this
Yeah,
was the down bar for the candle. For this candle to have a high here, price should have retraced all the way here.
correct.
So it retraced all the way here, then went down. So this was the first time or first attempt to go higher. Move down, move down. This was again an attempt to move higher. That
Yeah,
is why you have a high here in this candle, because price opened on at this point. It went all the way up here during the minute, and then it closed all the way down here. So at some point it tried to move higher.
yeah,
Yeah, so first attempt to move higher, second attempt to move higher, third attempt, and this will be the fourth attempt. So this is
correct.
also a wedge bottom of sorts.
Mhm.
And what did I just tell? This is also a deep pullback volatile structure. So
Yes.
this was technically first attempt, and this is the second attempt. So you can go long one tick above this bar, put your stop loss here or here, and hope for a test of the recent high or recent pivot. The recent pivot was also day's high, so you could exit there, or you could exit at 1:1 risk to reward for a scan.
Yeah.
Okay, this was trading range price action. Again, if you see strong bull bars, weak doji bar, strong bull bar, weak follow through bar, strong bull bar, weak follow through bar, doji bar, strong breakout bar, weak follow through bar. One,
Mm.
two, three. This is also a sort of
Yeah.
wedge. So can you
Mm.
go short one tick below this bar slow? You can. It didn't work out. That's fine. Instead, the base who shorted here got trapped on this bull bar, right?
Yeah.
But this is still in a trading range. Why? Because it didn't close very strongly above the high of the trading range. And if you see, this follow through bar is not a very strong closing bull bar. So the breakout might fail. Why? I told you that markets have inertia. If it's in a trading range, it would like to remain in that trading range 80% of the time. If it's in a
Mm.
bull trend, it will like to remain in that bull trend 80% of the time. Only 20% of the time you will get sharp reversals. So if it's in a trading range, only 20% of the time you'll get a strong breakout and then continuation. So this was a weak follow through bar, inside bar. You could have gone
Mm.
short here, hoping that it will go to the mid section of this trading range for a scalp.
Mm.
Suppose you shorted one tick below this low, put your stop loss here. Your stop
Yeah.
loss got hit, but then this bar again closed near its low. So you can go short again, one tick below this bar low, place your stop loss here and hope for a scalp down. Is this much clear?
Yeah.
Okay. This is again we are still in a trading range. Strong leg, pullback, leg two.
Yeah. Like to.
So this is the bottom third region. You will wait for long setups. You could either
Mm.
enter on the long side here, one tick above this inside bar, hoping for a scalp up, or wait for this strong closing bull bar. This was an inside bar. You get in here for a scalp. Why? Because in trading ranges, you only scalp.
Yeah.
Also, if you see 1, 2, 3 bars closing near the lows, but what is the characteristic of the market here? It's in a trading range. So even if you sell here, you can't expect a measure move down for 1:1 risk to reward. Suppose you sell here, put your stop loss here. This is where the
Mm.
price should reach. It did reach there, but since it's in a trading range, it's better to not take this trade and wait for other setups.
Yeah.
Okay, here you go long, you got your scalp. Now, if you see 1, 2, 3 bear bars closing near the lows,
Yeah.
if you don't want to short this, I would short this. I'll explain to you why. I just now told you that I don't want to short within the trading range. This was the trading range.
Correct.
But here, if you see, this is one more
Mm.
trading range within that trading range,
Basic
and
range.
bulls who bought here, hoping for, okay, this is the breakout of this trading range, decent enough follow through. I mean, this was a weak follow through, okay bar. So maybe they are waiting for a retest of this breakout, and then maybe they will get a swing up. They are getting trapped here. Whoever bought here, they are getting trapped here again.
Yeah.
So this is a fresh trap, and we are in one more trading range. So I could have shorted here, put my stop loss here, and this was my measure move. It's still going to be a good trade. Why? Because this is the big trading region. Price has to
Mm.
reach this bottom third region for price to reverse up again, and
Yeah.
I have space to make that profit. Suppose this trading range was somewhere here, the trading range bottom
Mm.
was somewhere here. Was it logical
Yeah.
to sell it then? Would it be logical to sell it then? It is so close to the bottom third region, you know the price might reverse. But here instead, if you see, it has enough room to give you a 1 is to 1 risk to reward. Why? Because big up,
Correct.
big down, this is the bottom third region.
Mm. Yeah.
So this much is clear here.
Yeah.
Okay, now again, first attempt to move over, second attempt to move over. This was the recent bear trend. So you can go short one tick below this bar and put your stop loss above the bars. This was 1 is to 1 risk to reward. I would exit at 1 is to 1 risk to reward. Why? Because it's still in the trading range, but then it gave you almost 5 IR profit. It happens at times.
Yeah.
It's also a
Mm.
measure move down of, say, this bar. If you sold this bar's closing and put your stop loss here, this was your 1 is to 1 risk to reward. This is your 2 is to 1 risk to reward. So there are all kinds of setups you can trade. If you missed one entry, you could take other one. It's always going to be
Mm.
that way. So how many trades did we see here? One, two, three. Fourth one failed. Five, and then this again is one attempt to move high lower. Second attempt to move lower. You can short this. I missed
Mm.
this trade, I guess. Sorry. So this is the sixth one. Here it's just trading range. Here you could have gone long for a
Yeah.
scalp. So this is the seventh trade. Eighth trade. If you sell this closing, then ninth trade, 10th trade.
Mm.
And if you see here, we are okay. So this is 10 trades in what? 1 hour, 1 hour, 30 minutes. And you lost only one
Mm.
trade if you traded it well. Okay, you lost
Yeah.
two trades. There were 11 trades. I missed to count this one.
Okay. Mm.
Yeah. So if you get good at it, you can scalp it that way. Now let's come to the second leg. Leg one, pull back, leg two. We are still in a trading range. And if you see, the leg two is strong. One, two, three, four,
Yeah.
five. This leg two is stronger than the leg one. What is it doing? Bears who think that this will lead to a measure move down, they will get trapped. Why? Because this is still in the trading range. And leg one, pull back leg two, where leg two is stronger than the leg one, usually is a trap when it is within the trading range. Here also, if you see
Oh.
leg one, pull back leg two, trap. Leg one, pull back
Mm.
leg two, trap. If you call this as leg one, pull back leg two, that is also again a trap. Or you can call this leg
Yeah.
one, pull back leg two. So you know that price might reverse here. And it is also close to day's low. This was where the day started, right? The
Yeah.
first bar. So it's close to day's low.
Correct.
So
Mm.
now day's
Correct.
low is acting as a magnet. When it's closing strongly here, it is acting as a magnet. That is why price rushed to that level. Now we will have to
Okay.
wait and see
It
whether it
will
will
not
act as
go
a.
beyond that,
No, it's
huh?
not a
At
given
that
that it
point.
will. Yeah, it's not a given
Yeah. Yeah.
that it will stay there. It's just signifying that
Mm.
I'm a magnet and I will take a rest here. It can either lead into a strong
Okay.
break below, or reverse, or just go into a trading range there.
Trading range.
Yeah. So
Yeah.
if you see, first attempt to go higher, second attempt failed here. I would have gone long here if I had traded, but I took many trades here, so I didn't go long here. So this is the 12th trade that failed. Again a trap, and this is one first time moving higher, second attempt at going higher. This is the third attempt at going higher. So this is also micro wedge. So you can enter one tick
Okay.
above this bull bar, hope for a swing trade. Why here I would hope for a swing trade is because big up, big down. So this is a huge trading range. So even if I want
Yeah.
to exit at a middle point, it will give me easily more than two, three, four. Yeah, more than 4:1 risk to reward. So why scalp when you have an opportunity to swing and when the context is right? What is the context? Huge trading range. This is the bottom of the trading range. You got micro wedge bottom. Also, day slow acting as a support, and this huge bear leg got their second leg. See, this is also strong breakout for the bears. So they have to get one more
Yeah.
leg down. So this was the leg down for them. This one single bar, or you can call this one and these two bars. Instead of getting a proper measure move down, they got a small leg two. So they are getting
Yeah.
trapped. If you don't want to take this first entry, wait for the second entry, go long here. So that's it for today,
Okay.
Shishmita. Uh, Thank you.
Thank you.